Rich Ross, a senior managing director and head of technical analysis at Evercore ISI, argues that market conditions are increasingly aligned for a powerful extension of the bull cycle, with the S&P 500 tracking towards 7,000 by year-end 2025, 7,400 in early 2026 and potentially 8,000 later next year. His framework spans rates, currencies, commodities and equities, with the following 10 standout trades shaping his 2026 outlook. S&P 500 upside continues. Ross stays bullish from both top-down and bottom-up perspectives, arguing that falling inflation, yields and energy prices, combined with steeper curves and tighter spreads, create a backdrop supportive of broader market cap expansion across sectors and styles. Long bonds. Ross expects the United States 10-year to fall toward a 3.0% to 3.6% range, following declines in the 2-year yield, inflation and policy rates. He sees yield curves bull steepening, a setup he views as constructive for both bonds and equities. U.S. dollar downside. The strategist targets the U.S. dollar index falling toward 90, following what he describes as the worst first-half collapse in 50 years. He sees continued dollar weakness as a major tailwind for global risk assets. Euro breakout. Ross expects the euro to US dollar to break above 1.20, emerging from a 10-year base. He also flags strength in the offshore Chinese yuan and sees the US dollar to Japanese yen stalling near 160. Crude oil downside. Crude oil WTI futures is projected to move materially lower as it breaks down from a multi-year top. Ross argues that falling oil prices, absent a recession, are historically bullish for equities. Gasoline collapse. Natural gas futures are seen falling toward $2. Ross highlights this as an underappreciated positive for consumers and risk assets. Gold breakout. XAU/USD is a core bullish call, with Ross targeting 5,400 as technical momentum builds amid dollar weakness and declining yields. Silver supercycle. Ross is especially constructive on silver futures, calling out a breakout from a 45-year cup and handle formation and targeting 100. Technology leadership. Technology remains the dominant equity trade. Ross argues AI trends are intact despite shaken sentiment, flagging Nvidia, Nasdaq, NVDA, Broadcom, Nasdaq, AVGO, and Taiwan Semiconductor Manufacturing, NYSE, TSM, as oversold at support, while Tesla, Nasdaq, TSLA, and Palantir, Nasdaq, PLTR, are seen doubling. Financials, retail and biotech. Ross favors banks, alternative asset managers and payments names, sees retail rebounding as State Street SPDR S&P Retail ETF, NYSE, XRT, bottoms, and calls for a biotech breakout, with Eli Lilly and Company, NYSE, LLY, targeting 1,400. He expects staples, energy, materials and REITs to lag the broader market in 2026.